I see it every week. People panicking all the time because big Wall Street hedge funds are buying up little old properties in the UK. And look, for once I'm here to tell you that the headlines aren't wrong. Lots of my videos will say, oh, look at the headlines, ignore the mainstream media. But in this case, they are a little bit true. Since late 2023, the world's biggest investor, Blackstone, have been buying up UK property. They've bought 4,500 British homes, and they've dropped about £1.4 billion doing it. And they aren't stopping. And they're not the only ones. Institutional money is flooding in to the UK property market. So why are global financial giants buying up 2 and 3 bed terrace properties in Bolton and Bootle like you or I might want to? I spend my days speaking to developers, investors and builders to get the inside track on stories like this. And the news isn't just unwanted noise. In this video, I'm going to break down what it means for smaller investors like you or I, and whether you're going to get pushed out of the market completely. Spoiler alert, you're not, but you do need to wake up a little bit. Right, let's start with numbers and data because they don't lie, and my subjective opinion on stuff is irrelevant if the data doesn't back some of it up. Blackstone has taken their property portfolio in the UK up to 17,000 homes. Now, big institutions investing in property in the UK is nothing new. Pension funds and private equity firms have been doing it for years and years and years. But here's the shift. But traditionally, they'd only be interested in city centre blocks, hundreds of flats, student buildings, stuff that they would even do their own build to rent, where they buy the land, build it all out themselves, own it from start to finish. But what has changed recently is that they've started to buy the 2 and 3 bed terraced and semi-detached houses out in the suburbs that we're not used to seeing them do. According to Savills, 54% of investment in 2024 went into single unit family homes. That's up 32% in the previous year, and in 2019 it was only 5%. That is a huge shift and change. What's happened in just a few years, the smart money has moved out of the city centre flats for the young professionals and gone into the suburban streets where the ordinary landlord lives. So why are they doing it? Because to be honest, the buy-to-let world feels ever so slightly chaotic at the moment. We've got the Renters' Right Act coming in on the 1st of May, Section 21 has been scrapped, mortgage rates are sitting around 4.5% to 5% now, and landlords are selling up left, right and centre because they can't be bothered with the hassle anymore. So why would a company like Blackstone be throwing billions at a market that lots of people want to get out of? Because for a business like Blackstone, they like something that is slow and steady. They want something that pays them every single month, year after year. They want something that's predictable, and they want something that is inflation linked. And residential property still delivers that, because when the markets wobble, we all need somewhere to live. That will never ever change, and I have been pushing that on some of my previous videos. COVID has changed how these massive funds think about risk. In the past, they were allergic to owning thousands of individual homes spread out all over the place. It was too much hassle. It was much easier to own one huge shopping centre with one tenant in, with a Debenhams or a BHS. But during the pandemic, retail and office blocks took an absolute beating. And while residential property kept on going in the right places. And actually we even saw, as you know, out the back end of COVID, rents absolutely boomed as supply and demand came into play. This consistency is gold for someone that is managing billions of pounds. And before I tell you what this means for you, can I just ask that you subscribe to my little channel, and if you like this video, give us a thumbs up so we can get it pushed out to more people that are interested in property. And a big thank you for watching. So they're shifting to a safer, more resilient income stream, which is residential property. And because of their size, they can absorb some of the maintenance and compliance costs that come with owning property these days. And because these big investors are buying these properties and doing such a good job of it, it is becoming worrying for the smaller landlord that they are going to get squeezed out of the market. If institutions like BlackRock have the money, the scale, the tax advantages, does that mean the rest of us are redundant? And before you start panic calling the estate agent to sell your portfolio, let's just have a little look at the reality. In Germany, big companies own about 30% of rental property, and their rental market hasn't collapsed. It's actually one of the most sustainable rental markets in the world, believe it or not. And individual investors happily, I say happily, but they coexist with the big institutions. Compare that to the UK, where only 3% of the rental market is owned by big institutional funds. We are a long, long, long way from a corporate takeover, no matter what the news will tell you. However, saying all that, and this is where you need to wake up, and we've been saying this for a little while, you are going to have to make changes. The market is shifting and things are changing in the UK residential letting market. When big companies enter the market, the standard lifts. The properties are newer. They have systems. Maintenance works gets done quicker. They can fix boilers in a couple of hours, not in a couple of days. Their compliance is absolutely spot on. All of their paperwork is absolutely right and in place. They don't have bad tenants very often because their vetting process is rigorous. And let's be honest, individual landlords as a whole don't operate anywhere near these standards. If tenants and customers start ditching damp, mouldy houses that aren't looked after for these newer, better standard properties, who can blame them? We've seen this happen in the student market a lot. A lot of old, tired student homes that were traditionally a bit naff. Students want better standards these days. They don't want to live in your traditional old, mouldy student home. And some of those landlords in those old student properties have been squeezed out the market by the new shiny blocks with the ensuite bathroom. But here is the good news, and I've been pushing this for a while. If you are a good landlord, the UK property rental market is still a great place to invest. If you have good standards and want to run your business properly and want to run your property portfolio professionally, then there is still a place for you to sit alongside these huge institutions which are inevitably going to invest in the market. If you treat your tenants like human beings, if you keep on top of the maintenance, if you deliver a great product, there is money to be made in the UK rental market. Then, if you become a good, independent, small landlord and have a great product, the tenants are more likely to choose you because they want a face, they want a name, they want someone they can go to. They don't always want to go to the big institutions. They will work with people like yourself. If you can deliver a great product, if you've done your due diligence and bought a property in the right area and they want to live there, they will choose you and they will stay with you. And something that you could even press if somebody has a choice between an institution and yourself down the line, which isn't quite there yet, the big institutions are a lot more likely to be money hungry and increase those rents every year, whereas you might have a little more give in the negotiations when the time comes. But the bottom line is this, and I think this is a key headline in a video in itself: the days of the accidental landlord are gone. They have completely gone. It is now time to be a professional landlord. You have to build a property business. You have to treat everything like a business. Property is no longer a side hustle or something you can stumble into. This means you have to know your numbers. You have to know where you are buying. You have to know your yields and your rental income. You have to know your mortgage rates. You have to know your refurb costs. You have to know why people will live there and where the market is going in the particular areas you are investing in. You also have to build systems at the back end that help you manage that property when you get tenants in there. You have to look after them and you have to treat them like human beings and good customers and not people that are just paying your mortgage. And if you can do all of this, not only will you survive, you will likely thrive. The cream always rises to the top, in my opinion, and if you look after what you do, your business and your product, you are likely to reap the rewards from it. The more lazy landlords that do a bad job and exit the market now will give us opportunity to invest into the UK property market and make money. And if this video has inspired you to invest in the UK property market and you don't know quite where to start, please book a free accelerator call clicking on the link in the bio. And if you want to use Property Engine like I do, which is basically Rightmove on steroids, there is a link in the bio as well to get started so you can start finding property deals today using AI and incredible software online.